that would be incredible. But where we are here at 42 to 1, you're looking at $84 silver. So is it crazy to say this shit? No, it's not. Yeah.
You know what else is good?
What's that?
$41 silver.
$41 silver, it is, yeah.
By the way, I think that we were just talking about this. I think it was it last week or the week before? But we were talking about potentially 41 plus silver.
$41 silver, $3,550 gold.
Yeah, well, and rising. $42 silver on the futures. I was texting you late last night. It was 41.
Why don't you explain to the audience the difference between spot and futures?
The spot price is the price today that is traded today. The futures market trades at a different number.
In the future.
For the future, that's exactly what it is. And there are times where typically the futures market is going to be higher than the spot market, but there were times just in the recent past that the spot market is actually going to be higher than the futures market, which is very much indicative of the current demand for physical silver called, what a minute,
backwardation. Don't sell yourself short.
But what I thought was very interesting, and what we've talked about here, was that $40 level, and getting above it was very indicative. And then from a charting perspective, he said that,
of what?
We said that we could be going to 100, and then from a linear standpoint on a technical basis, he thought we could be going to 4, 5, 6, 700, which is out there. Clearly.
Well, who knows what real price discovery is in a market that's been beaten down by suppression for so long,
years and years and years and years,
but is being exposed now by the deliveries of the most sophisticated people in the world.
Tabby Casa, who I think that you've spoken about several times, from Crescent Capital, he had said in the article that I read that the crossover movement that we're seeing right now is probably the beginning of the most significant rebalancing that we've experienced in recent history, which I think that this movement that we're seeing is clearly indicative of that. I mean, market when the futures opened this morning, futures were looking down close to 500. The thing that was a little, I guess, not concerning, but a little awkward was that silver futures were extraordinarily high, gold futures were high, but the dollar index, the DXY, was also up marginally, and then it ran up higher.
When do you ever see gold and silver up in the face of a strong dollar?
Which is why I said this is definitely something that we have not seen before, and I think that it's one of those things where when we look back at the last time gold has made and silver have, well, gold is clearly, we're sitting at an all-time high, but the last time silver was sitting at these levels or anywhere close to these levels, it was very short-lived. And now I think we're starting to see things that are not so short-lived.
It sure feels that way. You know, like I've made a habit of not predicting things in a fashion whereby I think when you set yourself up to fail like that, it's bad. I like to think in terms of probabilities. We live in a world of probabilities, no absolutes. The probability is, yes, we're going to, I mean, it seems that way. The strength that it's gotten, it's broken out of a consolidation pattern. Both of them have. And if you look at the way the metals market has worked lately, it goes up, it consolidates for a period of time, it goes up again, it consolidates, and it seems like this consolidation pattern, which really hasn't gone anywhere for a while, it's been chopping around, seems to have broken through. I'll liken it to gold trying to get through 2,000 and then trying to get through 2,200. And then once it did, it just kept running. I would say that something feels very different in all of the monetary metals right now. Like there's demand that is overwhelming the ability to knock it down. The one difference between now and any time I can remember is that when they knocked it down, it was like Mike Tyson hitting them in the jaw with the right hook.
Yeah.
And they didn't get up. In fact, they rolled off the damn, floor onto the cement, and you never saw them again for a long time. It's different now.
Well, I will say this, because the knockout punch that we saw, at least in the just near past, was the tariffs. How long ago was that? When did Trump announce the tariffs the first time?
A year ago or
No. When he actually announced that it was going to happen, when the market like
oh, that
fell
was
back
what,
down.
Liberation Day?
Yeah, around what was it?
I don't know, maybe March, April.
Okay. So the market got blasted then. We saw metals down, the largest percentage decrease I've ever seen in the metals market. We saw silver go from, I think it was 32 or 33 down to 27, 28. That's when I called you and said, what do you think of the swap? And before you could even answer, I had done it already. From that point till now, we're up 40%.
See, what I liked about that is you didn't call me freaking out. What's this mean? No. Is it over? Is it? No. A lot of people get too emotional and have been.
There was no freak out to me. I actually was. I know it sounds a little weird, a little excited that you get to do those things, because there was some sort of what I believed a huge upside in getting rid of some of my gold, which I love gold. Clearly, I follow you. But I thought there was an extreme opportunity to get silver.
Generational.
Yeah.
That's why you get it. You've gotten it faster than anyone.
Almost caught the bottom at 27 and a quarter around there, and I still ended up, I think, paying at like 27.60.
Yeah. Phenomenal. I mean, look, we can make this easy. We have gold right now at roughly 35.33. Let's just call it 35.40. So if we take 35.40 and we divide it by even say 70, which is way higher than it's been on average for the last 100 years, you get $50 silver. So if all we did was just get to 70-1 on the gold silver ratio, you're at $50, and 70-1 would still be not only way off from its average, but 6 times. No, it's coming 10 times. 10 times higher than it's coming out of the ground at. The geological level right now is 7-1. When we talk about real potential, Kevin, like anytime someone says you can double your money, I'd say run as fast as you can. But when we can double the amount of gold we could otherwise get today by buying silver at a ratio of where it is here, watching it get down to, the average of roughly 45-1, 42-1, that would be incredible. But where we are here at 42-1, you're looking at $84 silver. So is it crazy to say this shit? No, it's not.
But he thinks that the silver to gold ratio is headed back towards 60. So you're talking 70 and putting it at $50. And if we go to 60, we're talking about certainly north of 50. We're talking
$59 right now.
And I happen to have said, here publicly, not that I know any more than anyone, or the batteries in my crystal ball work better than anyone.
Common sense.
But I think, as we said, that and I know that you don't go out on a limb and make predictions, but I had said that I thought it is possible that we see 60 silver by year end.
The thing is, forever the West could do this without repercussions, without without anyone saying, let's beat them at their own game, let's stand for delivery. But they're standing for delivery now. So to short something without the ability to get it back to naked short something is as stupid as a mud wall. And so, yeah, I think that there's a high probability we are beginning to see. And I don't want to go as far as saying the end of suppression, but certainly it not being as potent as it is. And someone that I used to respect an awful lot, he's no longer with us, used to say, and I must have said it a million times in his honor, that you can only manipulate a market for an extended period of time by pushing it in the direction that it goes, or it is going. And most of my career, no one wanted this stuff. It was U.S. equities, U.S. treasuries, U.S. real estate, U.S. dollars. But as we can see, the dollars are falling out of favor. The treasuries are falling out of favor. The equity market is as overvalued as any time since the 1929 crash, and the institutionals are selling at $2 to $4 billion a week clip, as are the Bezos and the Zuckerbergs. You're getting warnings from Jamie Dimon. You're getting warnings from Ray Dalio. You're getting warnings from Warren Buffett, who's got $500 billion in cash. So all of the things that used to be aren't, and the sophistication of these countries and the understanding of this is how you win the game, it's real. And I think sooner or later people need to understand that. I think that Brent Johnson's an amazingly smart dude, and the milkshake theory that he has been right for a very, very, very long time, Kevin. And I think that the idea that everything has to flow back into dollars because of the indebtedness that's all in dollars has been true. But you can see that even that starts to unwind as subsequent purchases, subsequent trade deals, subsequent agreements are outside the dollar, which is chipping away at the dollar hegemony, and it's accelerating for sure. Just like the way that we overplayed our hand, Trump did, against India, threatening 50% tariffs if they continue to buy Russian oil. And Modi just was at the Shanghai Cooperation Organization meeting, hugging Xi Jinping and hugging Putin and saying we will not be bullied by the West, because even though, real quick, let me just finish this thought, even though we're their largest trading partner, represents about 3% of their GDP. So, yeah, they don't want to get on the wrong side of the U.S., but I think they understand that the cheap oil from Russia and this growing unity on the BRICS is something they don't want to back away from either. In other words, India hosts the BRICS meeting next year. They're not going to be bullied by Trump or the West into pushing away from Putin. In fact, I think we've pushed them towards him, and maybe that's part of the idea to shed the reserve status. But all I can tell you is that I don't think we've seen anything yet. I don't think people are prepared for what it will be like in a dollar environment where the dollar is massively devalued. And let's remember, who filled the last Federal Reserve spot? Stephen Meering. What is he? The author of the Mar-a-Lago Accord. For a devalued dollar is what he's talking about. We will see a lower dollar, meaning we will see much higher gold and silver prices. We haven't begun to see how this plays out.